Happy 2023 Maverick Traders. This is Rob Reinhold. I'm joined by Darren Fisher, and this is our first trading room of the new year. So let's get into the first week of the year. And the first week of the year was one that was choppy until Friday. For the last 2.5 weeks, we have been stuck between 3,800 and 3,880 on the S&P. That's a 2% range. That's a pretty tight range for the S&P to be in for 2.5 weeks. And a couple times during that 2.5 weeks, we tried to break down and it recovered. A few times we tried to break up and it fell back down. And it looked like that's all that was happening this week until Friday. Friday, we came all the way up to that 3880 and it didn't stop. And actually pushed above and we closed at 3895. Now look, we're talking about 15 S&P points. That's about 0.4%. I am not ready to call that a breakout, and we'll take a look at all the charts. However, on Monday, if we have another update, I'm definitely going to have to call that a breakout, which means that we have moved out of the top of the range, which technically says we are most likely going higher. We do want to talk about the January effect. We are in January, and of all the months of the year, this is the one where the strongest sectors in the past tend to weaken, and where the weakest sectors in the past tend to strengthen. It's called the January effect. It's mostly from rebalancing of portfolios, where people will sell off their winners because they're over-allocated and buy the losers because they're under-allocated. This may happen this year, so just be aware of the January effect. We will be talking about this for the whole month. I don't see it right now happening, but if we do see it, we will definitely let everyone know. And then we had a lot of FOMC speeches this week. And here's the thing. They all came out and said that rates are going to go higher and stay higher for longer. And many of them said the Fed is going to go above 5%. Right now, the market is not pricing that in. They're pricing in about 4.9% as the high. So the market doesn't really believe the Fed here and what they're saying. Let's get into the economic news because we got some really big economic news this week. And it was definitely kind of a mixed bag. So let's take a look at Wednesday. Wednesday, we got the manufacturing number, 48.4. Anything below 50 is a contraction. So we are in contraction in the manufacturing sector here in the US. Now that is actually good news for the market. Remember, right now, bad news is good news and good news is bad news. So the ISM came out, hey, bad news, the Fed's probably going to back off. Next, we get the job openings. And all of a sudden, they're much higher than expected. The Fed has mentioned they want job openings lower. The market sold off on that news. Then we got the minutes where they talked about staying higher for longer. We got the ADP employment report that was much stronger. And then on Friday, we got the employment numbers. And this one actually threw me for a loop. This one confused me because remember, good news is bad news and bad news is good news right now. The jobs report came out at 223,000 new jobs, but the unemployment rate dipped to 3.5%. The Fed has said they want that number to be 4.3%. It's going the wrong way. In the past, this number would have caused the market to tank. However, hourly earnings came in a little bit light. Maybe some people found some good news in that. I have no idea. I really expected the market to sell off on Friday, and it didn't. And all in the face of bad news. We did get the services PMI, which is 2/3 of the economy. That number, 49.6, is the lowest number since the pandemic. So now we have the services PMI in a recessionary number. We are kind of caught between the leading indicators in manufacturing are showing that this economy is slowing down rapidly. The lagging indicators like employment are showing that it's still strong. Darren, what did you make of the numbers this week?
It's a mixed bag. And it gives you one of those things. I mean, you and I were talking beforehand. Hey, I'm a little more bearish on the market than you are. We'll go over the market in a little bit. But of 3 days of data right here, I mean, again, it's one of those ones, 6 to 5 and pick a side. I mean, that's your odds right here. I mean, it's this mixed bag that I don't think we're going to get. I think it's going to take a couple of weeks to get a clear direction here. Yeah, I mean, that's the best I can give you at this point. I mean, you've got, we're in this thing where good news is bad news and bad news is good news, Friday really threw everybody for a loop. And for whatever reason, I think you just have to you just have to chalk it up to there were more buyers than sellers on Friday for whatever reason. We may never find a reason. We don't need a reason. There were just more buyers than sellers on Friday, and we'll see if the trend continues next week.
And the thing that impressed me was that it was in the face of what I would consider bad news. And I've always said, when the market goes up on bad news, it tells you it wants to go up anyway. It ignores the bad news and celebrates the good news. We see the same thing in a bull market. Bad news comes out and it bounces off the market like it's bulletproof, and the good news is celebrated. That's a good sign here that the market does want to go up. So let's take a look at the weekly numbers here. And you need to understand that we went up like 2.5% on Friday. So the Dow Jones closing up 1.5%. It was down for the week until Friday. Same thing with the S&P, the NASDAQ, the Russell. You can see oil got absolutely creamed here, but the energy sector actually held up very, very well in the face of that. Gold was up, copper's up, all the materials are up nicely. So let's take a look at these S&P charts. And I want to start really focusing in on this range that I talked about. This range of 3,800 to 3,880. And you can see we hit it a couple times. It bounced off there, bounced off there. We pierced below it here. We gapped down, or sorry, we sold off, but gapped up the next day. As you can see, it's been a very tight range. I am not completely ready to say that's a breakout. I need one more candle. I need one more candle that takes us above the 50-day moving average, that pink line. Then I will say we have broken out of the range to the upside, and I now want to be more long than short. Darren, what do you think?
Yeah, I mean, I'm with you on that one. You know, it's a show me the money situation. I want to see, you know, a good green candle to get above that 3,900 level. And I would, you know, ideally like to see it on volume. It doesn't have to have a lot of volume, but I want to see that selling pressure. And that's going to, I mean, excuse me, I don't want to see the selling pressure. I want to see that buying pressure to get me to say, okay, we're firmly above the 50. Any market bias that I had to the downside, I have to put on the shelf and just look at the price action. Conversely to that, you get an inside candle on Monday, all bets are off. I think it's a coin flip again.
Totally agree with that. And before we get too far out over our skis, I do want to talk about if we do have a green candle on Monday. Like I said, we're going to have to shift to a more bullish stance. But take a look at the overhead resistance we have. We've got a lot of overhead resistance to work through. So if we do get a green candle, I think you still have to say it's probably going to be a mess to get through this area. This area in here, there's a lot of resistance here. So at best, we can be mildly bullish until we really clear out of that area, which I don't think is going to happen. I don't see us going up to 4,100, 4,200 on the S&P off of this move. I just don't see it. So what I'm saying is if we do get a move higher, I think you've got to play the move higher, but I think you just have to be reasonable of where it's going. Maybe 4,000 on the S&P as the high, maybe 3,950. So bullish, but not a lot of upside on that. We take a look at the Qs. Here you see the Qs. We were low basing. Now the Qs is a totally different story. We haven't poked our head out of the top of 270. And as Darren said, we get an inside candle on Monday. I want to be short the Qs. I want to be short the Qs if that happens on Monday. If we do break out and get a green candle, okay. But where are we going? 280? Okay, that's like a couple percent. So if we get a breakout, we do need to get bullish, but I want to just remind everyone, we cannot get too bullish. Can't get too bullish on this market. And then Darren, can you talk to us about what you see in this VIX? This VIX hasn't reacted to any sort of downward move in the market lately. And this is, again, another kind of strange thing is that we had some real bearish days in December, and you can see the VIX did not pop on these. What do you think?
Yeah, I mean, it's really odd. I mean, you take a look at, especially Friday's candle. Friday's candle has me really kind of puzzled right there. As much as we moved up, I would have thought the VIX would have gone down a lot further. So I think there's a lot of there's a lot of hesitation in this market. There's so many people, so many managers got burned in 2022 that I think nobody's going to slap them on the wrist for waiting 2 weeks, maybe even 3 weeks before they get their investment theses, their positions put on for 2023. I would have thought that the VIX would be much lower, down to more that 21 area after a breakout like this, but it's not. So that tells me there's a lot of hesitation right there. There's people that don't believe the rally, and they're just saying, hey, just give me a couple more candles so I can validate, myself, and I don't want to get burned in 2023 the same way I got burned in 2022.
Yeah, I think you're exactly right. There's a lot of hesitancy out there. And that's why, again, I'm going to circle this. Be wary of a breakout higher. Now, look, I'm not saying short it. I'm not saying don't trust it. All I'm saying is understand where we are. We are at the first of the year. We have had mostly bearishness. We had a really bearish last 2 weeks of the year, and December was a really nasty month. I want to say the NASDAQ was down like 9 or 10% in December alone. Coming into the new year, I think we have to understand where we are. Yes, we could absolutely get a little bit of a move higher here, but there's a lot of overhead resistance. I think you can get bullish, but I think you want to be moderately bullish, not wildly bullish or even very bullish, just moderately bullish. This week, there's going to be two things that happen that are going to move these markets. On Tuesday, we get Chairman Powell is going to speak. He's been pretty good at being consistent. I don't think the market's going to react to this one, but the CPI on Thursday is going to be the big story. So let's take a look at the expectations. The expectations are actually for a 0 for month over month. This is what the market cares about, the month over month number. The year-over-year number still looks really nasty, but they don't care about that. They care about the month over month, and we're also going to be taking a look at the core. This is taking out food and energy, which I think everyone can look around and definitely say that energy costs have come down, and food probably not so much. But we know that there is a lessening of the strains of inflation that we had last year. However, this number is going to move the market. If this number comes out hot, and I actually think this core number is more important than the headline number. The headline number could be at, a 0, +1. I think the market doesn't care about that. Even if it comes in at plus 0.1, I don't think the market really freaks out about that. I think this core, though, if this core comes out a little hotter, like at a 0.4, that's going to be bad news for the market. The market is not going to like that. If these numbers ease, it'll definitely propel this market higher, and we could actually reach up to that 4,000 on the S&P. We could get up to that next upper range with a good CPI number. As you can see, that's really all there is on the schedule next week is Chairman Powell speaking in the CPI. To wrap up our monthly and weekly outlook, we're at a 0. So again, this isn't just opinion. This is where we literally are. We are barely above the 20 and barely below the 50-day moving average. One of them is sloping up, one of them is sloping down. It is truly, technically speaking here, a 0. We've got a weekly outlook of 0. We will update that on Monday. If we get a green candle, we'll shift a little bit more bullish. If we get a red candle, we'll shift a little bit more bearish. But for right here where we are truly at the crossroads in the middle. We have no call at this point until we get a little bit more data. Let's take a look at some sectors.
Yeah, and the sectors are telling the exact same story. And we're going to see the histogram at the end of how we rack and stack everything right there. It's like you're at a horse race and the gun's gone off and the horses haven't done anything. And that's what it looks like on a technical basis. And we see communication services, and this is a difficult thing for me to do. I was really harsh on communication services for pretty much the entire year last year. And one thing that I have to do on a yearly basis is I have to just flush all my previous year's biases out, just flush them out of my head. Every day is a new year. I mean, I keep track of what the individual sectors and market outlooks have done on a very high-tech sheet of paper. and for, usually you can get about a quarter's worth of data on a sheet of paper. And I threw the last one out. 2022 is done. It's now 2023, and you just have to start with a brand new outlook. So in that spirit of things, communication services did awesome. I mean, you take a look at up 5%. I mean, that's great for any sector right there. I mean, you got financials and materials, 3.5% a piece. You look at healthcare, even down 0.1%. That's, everything is pretty strong. You had some that didn't participate. I mean, healthcare, tech, and energy really didn't move, but everything else was very, very solid. You got 6 sectors that had at least a 2% move, and even utilities, which doesn't, historically move a lot. I mean, they were almost, at 0.75% right there. So a lot of strong action. It did all happen on Friday, but that's okay. You take a look at it on a week-by-week basis, everything, and you just draw that line in the sand of when you're going to evaluate. Eventually, it's all going to go out. So let's take it in individual sectors here. Utilities, I'm going to go out on a limb here and say we're at a nice solid 0 right here. And we're going to see this throughout. I mean, we're going to have 4 sectors at a 0, 4 sectors at a +1, and 2 sectors at a -1. So as I said, you're at the horse race, the gun's gone off, and nobody's gone. And the jockeys are all sitting there looking at each other. Looking at communication services, this is good. You've got some solid days, 5 good candles right there. You're up above the 20, you're up above the 50. A little bit of resistance, coming in over there, but, you're either range bound in a very wide range right here. Technically, I think you got to go +1. You're even if we drift up into resistance right there, that's fine. There's a lot of things out there that you can do. A lot of chicken bulls and chicken bears, and we'll go into that. We're talking very short-term credit spreads that are theta positive. You're looking at $1 or $2.50 strikes. You're not going out on a limb. There's a lot of stuff out there that you can play that way, and this is a very good market to play that. Looking at real estate, again, I mean, this is a 0. I mean, we're pegged right to both moving averages right there. Good candle on Friday. But you take a look at 20 and 50 are touching each other. They're at the midpoint of that candle right there. We're trying to decide, do we want to go up? Do we want to go down? Now, I would say if you put a gun to my head, I would have to say a +0.5. Just look at the slope that's happened the past 2 weeks. Got a series of higher lows right there. So, technically we're at a 0. It would not surprise me for this to continue to drift up. Maybe not with the intensity of a +1. But with a 0.5% up for the next week. Looking at industrials, this is looking good to me. I'm at a +1. I mean, you can make me the case that this is +2, but everything was really stacked right bouncing off that 50-period moving average for the past 2 weeks. And we've not made a lot of, except for today, we haven't made a lot of new higher highs. So this is going to be those ones. It's bullish, yes. I want to wait to see what next week's action is to see if we get the velocity that I'm looking for. Can we break above into new highs? If we break above the new highs, I'm happy to say, hey, +2, maybe even +3. Let me just see what the rest of the market does and see if industrials is going to be a leader again. Over here looking at healthcare. Again, nice solid 0 for healthcare. Good showing there, healthcare. Right between the 20, right between the 50. And you can see that on Friday, healthcare had a little bit of issues in the morning right there. I mean, there's a long lower shadow, but at one point we had gone down to the very lower end of the range. Now we came back from it right there, but the early indications were that healthcare was going to weaken. Now it didn't. This is looking pretty good, but again, this is one of those ones I want to see some more strength from before I'm going to get above that. In between, right above the 50, below the 20. Still range bound right there. I think we've got to wait for this to break through its range before we can say, yes, nice solid +1, or hey, this is broken down. We're going to go with a negative outlook on healthcare. So this is another one that's just sitting there waiting for someone to tell it what to do. Looking at financials, nice +1 on financials right there. I mean, it had broken out, I would say, on Wednesday. Gave us a little bit of a scare on Thursday right there, but solidly above the 50 right there. Friday's candle looked excellent. We've got some overhead resistance at about the 36 level right there. So this is another one. I don't want to be really bullish on anything right now, but this is something that I'd look to slowly drift up and meander up. And you can see for the past 3 weeks, we've just been making those higher lows, and this a small series of higher highs, but it took us a little bit to get above that 50 period. Once we did, it really looks like it wants to be bullish and doesn't want to go back. So I'm liking financials right there. A consumer, we're looking at this one. I'm in a -1. I mean, it had a good showing on Friday, but I mean, we're firmly below that 50, just barely touching that 20 right there. Not a whole lot of action right there. I think this got drug along with everything else on Friday. So technically, though, I've got to say, if something's got a negative outlook, it's going to be consumer right here. This is one I think is in most danger of rolling over and going negative. Tech's another one right there, below the 50, below the 20. Good showing on Friday, but we didn't go through the highs of the range right there. So just not the interest, not the intensity, not the velocity that we were looking for right here. So I think tech is at a -1. Looking at materials, it looked pretty good. Had a little bit of issue, very, very choppy. We're firmly out of that base though. You take a look at it. Friday's action, Wednesday's action was pretty decent up to the top of the base. Thursday's was a little confusing, but again, Fridays, we gapped up and continued to the highs, ran all day. I mean, this is looking really, really good. If you had to pick something that had the best performance on Friday, I would say materials is it. So I'm at a +1 right here, firmly above and normally I don't make these calls if you just break through the 50 period moving average, but this did it on such strength. I got to say, we're at a +1 right there on materials. And looking at energy, pegged between the 20 and the 50, we're at a 0 right now. Now this held in pretty good. I mean, you saw oil was down almost 9% itself, but the energy sector really held in there. I mean, we're range bound right there between the 82.50 and the 88 level right there. So we haven't broken out right there. Let me see a breakout. If we can see a breakout on falling oil prices, that there's a lot of strength behind this. But if oil prices drag the rest of the energy sector down, I think we're still range bound right there. So I just want to see, do we break out of this range or do we stay in the range? So I'm at a 0 for energy right there. So you take a look at everything. Like I said, this is a horse race. The gun's gone off. The jockeys are looking at each other, and the horses just don't want to move. Everyone's stuck at either a 0, a few at a +1, and just a couple at a -1 right there. And this just tells me that there's a lot of money managers that are very, very hesitant to commit themselves. Nobody wants to go out on a limb and say, this is the sector that we are going to, quote, sponsor this year as being the hot sector. Nobody's gone out there and put that flag down right there, which is fine. Everybody had a rough 2022 in the management world. So if they want to wait, 2 weeks before they put a stake out there, their claim that these are the sectors that they're going to be looking at, entirely understandable. So let's take a look at a few possible trades. And real estate we're going to be taking a look at here. We've got VTR, this Ventas, nice high base. You can see Friday we poked above that high base on Friday right there, and looking pretty good. So I mean, we're firmly out of that range, and I like it. This is one that's going to be good. So how are we going to play this? And in something like this where we can't expect a whole lot out of anything, either bulls or bears, diagonal calls work great. So you're going to go out there and be long that February monthly 45, and you go out to January 20th and short that 50. Okay, this is one of those ones that only has $5 strikes, and that's fine. You just got to give yourself a little bit more time. If it drifts up towards 50 over the next 2 weeks right there, that's good. We make a little bit of money, decide if we want to keep it. If it just we can reevaluate and we can always sell that February call if it doesn't do what we want it to. It's one of those ones we're not expecting a whole lot. Can you give us another $2.18 over the next 2 weeks? If it is, we'll be happy, and we'll see which way we want to go from there. Looking at communication services now. We've got Facebook, Meta, META, a little bit of a high base. We broke out of it, this week. Looks like we broke out of it on Tuesday. And this is one that's been beat down and slowly been coming back up. So how do we want to do this? Again, I'm going to go and say go long that January 27th, 125. Short next Friday's 130 against it. You can go out a little bit more on the long side if you want. If you want to go into February, that's something you could do. And this is one that we're not looking for, for a lot of progress right here. It's just, can you stick around that 130 level for the next week? We're only asking for 5 days. If you can do that, we're happy to get paid. If it goes, showing some strength, we can always hold on to that long call as well.
And Darren, I'm so glad you showed this chart, because this chart, I want to use this to share a little bit of a lesson with everyone. I hate Facebook. I think Facebook is one of the more hated companies out there. And when it was dropping, I was so inside, I was like, oh yes, it's this overvalued piece of garbage. And again, this is all just my opinion. But yet, when it comes as a trader, this chart looks amazing. I mean, take a look at the candles this week. 4 up candles. This in a week where there were 2 or 3 down candles. This one went up every single day and had more buyers and sellers. So this is where, again, Darren, you said you flush away all of your past year's biases and start new. Same thing here. This thing, you may not like the company, you may not like anything about it, but guess what? The stock is looking great. So thanks for showing this one.
No worries. Looking at healthcare. And this was the underperforming sector right here. So we're looking at Teladoc. Low base right here. We don't want to be all bullish. We don't want to be all bearish right there. This is looking pretty. This is looking pretty ugly right here. Look at Friday's candle. It didn't have. It wasn't green. It had a long lower shadow, but it just couldn't get out of its way. It was down 0.7% on a day when everybody else was enjoying it. So best way to play this, January 20th, 2023, bear call spread. Give it 2 weeks right there. So you're going to be short the 20th, long the 23. This is more of a delta play than a theta play, and that's fine. This thing looks like it wants to go lower. If you wanted to play it more delta, more theta-like, you could do something like the 22-24 would be a good one right there. A little more risk on that one, but if you're looking for something that is going to be theta positive, and you just got to go a little more to selling closer to at the money right there. Either way you play it, you want to play the delta play, you want to play the theta play, doesn't really matter. This thing looks like it wants to go lower, so this is going to be a good bear to put in your portfolio.
Moving on to industrials, this is my second favorite sector at the moment. Materials is my favorite sector, but so many things look absolutely wonderful in this sector. This is Raytheon. And Raytheon, as you can see, has been in a high base for about the last month. So we have had a very strong quarter. Remember, the market was weak, and this thing has climbed and climbed and climbed, based for a month, and now we've got this breakout. Now look, it did sell off a little bit at the end of the day. It's just fine. We've broken out. We've talked about being bullish, but not overly bullish. So I want to put on a trade on this where I can sit. We may not get a crazy run. We might just hold in these areas. So I'm looking at like a 100, 105 diagonal call spread. And that's just going to give me some time. As long as this thing stays above 100, I'm going to be very, very happy with this trade. And if it keeps moving higher, I'll be happy as well. If it takes off and runs to 110, okay, I'll make a little bit less because I'm diagonal, but that's just fine. These are the kind of trades we like here, these +1. This is a combination of a little bit of delta and a little bit of positive theta. You're just going to let this thing be strong and hold up above this 100 area. Financials, another great sector. This one has surprised me because last year financials were really not all that good. They are starting to look really good. And here we have AIG. Look at this move. This thing has not given up one bit. Even though December, the market was down, look at what this stock did in December. It has just chugged higher, and now we are starting to see some bullish breakout action. To me, this one is ready to go. If this was a raging bull market, I would be saying, let's do long calls. Let's do a couple other really aggressive strategies. Here's the problem. We're not in that market. We're in a market that is a 0 at the moment and might be a +1 next week. So we have to play things the right way in these kind of markets. So diagonal call spreads, either the 60-65, which is going to be right about at the money. So if you want to be more at the money where you're going to have less delta and more positive theta, you'll do the 60-65. If you want to get a little bit more delta, then do the 60-67.50 or even the 52.50 or 62.50, 67.50. That's going to give you a little bit more delta if that's what you want here. But the chart looks great.
So looking at consumer, we're looking at Kroger. And this one is definitely going to be a sideways play. You can see it's been in that range for a good month and a half right there. Stuck. We poked a little bit below it right there. But this thing has been range bound for about 6 months. It just hasn't been, it's been a wide range between 43 and 49, but it really hasn't done a whole lot. So if something doesn't want to move for us, the great thing about options is we have a way to capitalize on it. So it's going to be a 2-week trade. Going to do 43, 46, 49, call butterfly right there. 43 at the bottom, 46 in the middle, and 49 at the top. We think in the next 2 weeks, it's going to be somewhere between 44.50 and 47.50. If it can stay in that range in the next 2 weeks, it's going to be within our profit range. And this is great. If something wants to be dead money, the options are great. Have a great way to play it. In technology here, we're looking at Flextronics. This is at a nice little bull pullback over time. You could say we pulled in for the highs about a month ago at 23, and just went down there, kind of meandered down, and down to the 21 area. Now we bounced off of that nice little pullback, and very discrete range as well. But you can see the volume on Thursday and Friday. Something has told people, hey, we need to be long this. This really looks like some institution or a series of institutions really starting to put on a solid position in this. And hey, if they're going to do the heavy lifting for us, let's just be on the back. How do I want to play this right now? A couple of different ways. If the market tells me next week that this is really going to be solid, we're in a +1 environment right there, I would actually go out on a limb and take those February long calls. If the market doesn't do that, I'm going to be looking at Monday and Tuesday. I just think that a very discrete 22, 24, 2-week trade, bull call spread is the way you play this one. So long those 22s, short those 24s. That's still a pretty good range right there, for a 2-week trade. And you can always reevaluate. You can just do the 2-week trade. If it looks good to you, you can get it something diagonal. You can always play things over and over again, especially if they're doing what you want them to do. But I think in this market environment, just a very discrete, limited reward, limited risk trade is the way to play this.
Next is my favorite sector, and not to give away too much, but I actually think this is going to be the best sector for the year. Now, we are going to be doing our year-end review session live with our traders on Monday night. We'll be talking about some of the big themes that we think are going to be happening in 2023. This is one of them. I think the materials sector looks really, really good here. There's a lot of stuff working well. And here we have Dow. Now, I talked about Dow in my end of day video yesterday, and I talked about how good it looks for a breakout. And sure enough, we got that breakout today, gap up and a run. It's fantastic. So we already moved 4%. The question is it too late to get into this one? And for me, it really all depends on what happened before the breakout. How long did it base? How long did it coil up and gather some steam? Well, we have almost 2 months. Almost 2 months of sideways action. So we have this breakout. I think there's some more energy behind it. That being said, we just went up 4%. It's very highly likely that this might need to take a break for a while. This is when I love diagonal call spreads. These are just a great thing to pull out here. The stock is at $55 right now. So we will be selling the at the money option. And what that means is we will not make any more money if this thing next week goes any higher. We will just make this amount, which is fine. That's totally fine. If this runs out of gas, let's say that 4% move was a little much and it runs out of gas and then we just sit sideways or maybe pull back to 54, guess what? 54 is still profitable. That is still a profitable trade. It didn't run, but it just didn't fall. This gives me 5 days to test it out. If at the end of 5 days, let's say it's still at $55 and I think that the market is going to push this higher, I can simply hold on to the January 27th calls. And now I've got a much more bullish trade going. Or I could just close the whole thing. It gives me 5 days to really test drive this, see where it's going to go. Let's wrap this up with the energy sector. Darren, you had energy at a 0. I also have it at a 0. So let's play that 0 theme. Let's look at a call butterfly on Chevron. The big question is, where is your middle point? So whenever you do a butterfly, you're basically making a bet of where the stock will close on the expiration date. And that middle point is going to be the max gain point. You can pick any number. The question is, do you want to pick 180? Do you want to pick 175? Do you want to pick 170? You get to pick. I'm going to pick the 180. So this is going to be slightly bullish. So the 180 is going to be up here, and then the 170 legs are going to be down here, and 190 down here. So this is basically anywhere in this green area. If it will close here on the date of that expiration, which is going out 2 weeks, this is going to be a nicely profitable trade. If it does run and break out somewhere, we have limited risk because we have these legs protecting us. Limited risk and limited reward. These are the kind of trades we like to make when a sector is going nowhere. Let's wrap this up. On Monday night, we have our year in review. It typically is about 45 minutes to an hour. We talk about last year's themes. We go through our predictions of last year. We talk about some of the best trades and performance. And then we say, that was a great year. Let's close the books. Let's move forward. And we talk about 2023. So Maverick Traders, join us live for that one. If you can't join us live, it will be recorded for you to watch. As Darren said, new year, clear out your biases. Erase everything. If you had a great year, guess what? The market doesn't care. If you had a bad year, guess what? The market's forgotten. All that matters is how are you going to produce in 2023? To go back through our outlook on the market, a green candle on Monday, we have to admit that that has broken out. A red candle on Monday, we have not broken out of the range, and we're likely to go back to the bottom of the range. Monday will tell a lot, and we'll update you on Monday. Thank you so much for joining us. Everyone have a great 2023. Thanks, everybody. Goodbye.
Happy New Year, everyone.